I just felt like we were betting on ourselves. And I thought, if other people have done this and figured this out by this time I'm listening to podcasts, much like yours, Billy, I'm like, if other people are doing this, I can do this. I can figure this out. So it felt like a small step back and then, potential to take some big steps forward.
Welcome to the Going Long Podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And yes, I am your host, Billy Keels, and I am so looking forward to sharing today's conversation with you. I know you're going to get a lot out of it. It's going to be really, really awesome. So, you know what? Before we do that though, I really want to thank you. I want to keep thanking you because every single week, like week after week, our podcast continues to move up the charts. Everything is moving in the right direction. And that is because you continue to share the episodes, you continue to download the episodes, and you continue to talk about them with your family and friends. We really appreciate that you're doing that. We want to know that you are getting lots and lots of value out of that, and you are getting closer to your goals much, much faster. And in order for us to continue to attract these amazing guests that share their stories and give you all this great insight, it's wonderful that you continue to share your honest written reviews and ratings. And if you have not had a chance to do that yet, on the Apple Podcast platform, we made it really, really easy for you to do. Just in case you need some help, click the link. There's a little video and it will show you exactly how to do it. We're just looking for honest written reviews and ratings. And that is basically the things that you like, the things that you don't like, and the things that you want us to change, the things that you think would be really interesting for us to talk about, guests that you'd like us to bring on, whatever the case may be. Leave an honest written review and rating. Would really appreciate that. For those of you that are looking to find like episodes from like really from the very beginning, and you may not be able to find them on your favorite podcast platform, you can go to billykeels.com. When you get there, the screen's going to change a little bit, and then you will see the podcast tab. Click the podcast tab and you can find every episode, audio, video. It'll be absolutely amazing. So once again, go to billykeels.com. The screen will change a little bit, and then go to the podcast tab and it will be absolutely amazing. So with that, the third thing is, you know what? A lot of you are trying to figure out, hey, listen, I've heard about this investor club. I want to find out more about it. And so the easiest thing to do to find out more about it is for you and I to have a conversation. So send an email to aiclub@billykeels.com. That's aiclub@billykeels.com. You and I can get in touch with one another. I will follow up with you personally once I get the mail. And from there, you and I have a talk. I'll tell you all about the Accredited Investor Club. It is exclusively for accredited investors. What we're finding right now is there are a lot of people that are having some serious tax problems with active income, and they want to talk about things. And so, well, you know what? We're talking about that. So that's like W-2 wages stuff. So if you're interested, give us an email, send it to me, aiclub@billykeels.com. We'll get connected. We'll talk. We'll chat. And yeah, so listen, today's conversation, really awesome. We have an amazing guest who talks to us about, well, you know what? He did a lot of work, like literally 7 years of work, got his doctorate. And once he got all of that, he realized that it wasn't necessarily exactly what he thought it was going to be. There was always a challenge of either too much money, not enough time, or not enough money and too much time. And so he kind of got really, really frustrated and was figuring out, well, it's either or all the time. Then he had a couple books come across his desk, and then he read them and he realized it wasn't about either or. It was about how do I do this and that? So coming back to always what this thing I talk about, the power of and. So he's going to talk about that. He's going to share where he tends to focus his investing as an operator. It's a little bit more unique, right? And also extremely important for those of you that are going to be investing out beyond your backyard. You got to make sure you have the right people on your team and understand the location. We've said this over and over. And so today's guest not only is an active investor, an operator, and syndicator, also is someone who knows a lot about the great state of Ohio, specifically in the southwest of Ohio. And we're going to get to our conversation with Lee Yoder just after this. Are you looking for a way to get to long distance investing success, but not spending all the effort? You want to do it in a way that's much faster and it doesn't cause as much pain? Well, listen, I can save you all of that stress. Just go to billykeels.com/7 mistakes and you can pick up your free PDF to help you on your road to long distance investing success. So you know what? If you want to know how to go from PT to threefold success, in the real estate investing space, then guess what? Today's the conversation you're going to want to listen to until the very last word. You know why? I'm going to keep this one really, really simple today because I really want to get into the conversation. Because today's guest not only is a doctor of physical therapy, he got that degree from the University of Cincinnati. I think that's right. He's also a physical therapist and get this, he is the founder of Threefold Real Estate Investing. And it gives me great pleasure to welcome to today's conversation, Mr. Lee Yoder. Lee, welcome to the show.
Glad to be here, Billy. Thanks for having me. Excited to talk to you.
You know what? I am so excited to talk to you. I know the Going Long family is going to learn so much from you. You've got a lot of things going on, and I'm just really, really glad that you decided that you wanted to invest your time with us here first and foremost. So, you know what, Lee, I kind of talked to you about this before, and I know we've kind of chatted over social media and all that other kind of stuff, but everybody here is going to get 5 questions. You're going to get 5 questions. You're going to get 2 in the beginning. You're going to get 3 at the very end. And the thing is, in the middle, you're going to get a lot of questions. I just don't know what those questions are yet. But I know that your answers are going to add loads and loads of value to the Going Long family. So with your permission, I'd like to go ahead and ask you the very first question.
Let's do it.
All right, here we go.
Hit me with it.
So, all right, I'll hit you with it. So help us understand, where is it that you actually live in the U.S.?
I live in the great state of Ohio. Billy, I think you know something about it. I live down in the southwest corner in Cincinnati, Ohio.
All right, just a little bit. So, hey, everybody, if you're not watching the video version, you got to check out the video version because Lee and I both have like this massive smile. And of course, Lee, yes, the great state of Ohio. So I do kind of have to ask you this kind of question because I ask it every single time. And with you being from Ohio, there's kind of this like greeting that we like to do. So OH?
I-O.
Yes, there we go. Yeah, there we go. Okay, yeah. Everybody, Going Long family, they're used to it. So awesome. So Lee, the other thing is I'd love for you to share with question number 2. Is what's the most positive thing that's happened to you in the last 24 hours?
Yeah, Billy, great question. I would say, for me, it's family. I love being an entrepreneur. I love what real estate's done for me and my wife and my family. And then I get to be home, work from home, have such a flexible schedule. And so, just the fact that I, got to be with my kids this morning, making breakfast with them, spending time with them. I'm also reminded, I guess, even the last 24 hours. So yesterday, my son, his mind, it's kind of frustrating, but it's also awesome. Like he just like wants to tear stuff apart and tear stuff up. And he tore apart he has 2 skateboards, one's small, one's big, and like switched the wheels on him. And it didn't make any sense. And I kept like trying to tell him not to do it. And I'm, kind of frustrated, but he was so proud of himself because he ended up getting it done. I mean, it's not done well, and he didn't use all the pieces, and there's pieces. I'm like, put those in a plastic bag because you're going to lose them. But he was so happy because his skateboard is now what he calls more turny. It's more turny, so he can turn it more. And man, he was so proud of himself for doing that, and just being able to be home and experience some of that because we were working on some of it yesterday afternoon because we had some good weather finally here in Ohio. So that was awesome. Again, that's kind of what kids are like. Sometimes it's frustrating, but man, it just incredible moments. And I love just getting to experience those. And honestly, man, I can honestly say that, leaving PT and being able to do the real estate thing and work from home and have the flexibility, I get to do more of that stuff. So that was definitely a positive experience.
Yes, which is absolutely the amazing part. And I'm so glad that you remind us about those simple things, like being able to have and be at the breakfast table with your kids, and be able to see your kids go out and do what they think is the right thing, right? Supervised and being able to ultimately make their wheels more turny. So I think that's really, really awesome, man. I think that's really, really awesome. So, and here's the thing. And sometimes it's by design. I mean, it's pretty intentional. I try to tell your entire backstory in like half a second. I know it's a really impossible task, Lee, because you have done way too many things. But the thing is I kind of want to introduce you. And so at the same time, aside from talking about the fact that I know fatherhood is super, 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 super important to you. One of the things that happens every week is that the Going Long family, like they forgive me because I give myself this impossible task. I today ask you if you could also forgive me for trying to tell your backstory in half a second.
Go for it, yeah.
But at the same time, I do want to ask you a second thing. If you could help me by telling your backstory in your own words, in your own way. And the third thing I do want to ask as you tell your backstory is if you could talk to us about some of the major decisions that you made to get to this point in your journey, because you've made some pretty major decisions to get here. And then from there, we'll see kind of where the conversation goes.
Sure. Okay. So are you going first or am I going first?
You go first. You tell your backstory in your own words, because I already tried it and then, it never really works because I only give myself half a second. So you tell your backstory. Yeah. Tell it all in your words.
Okay. I'll start with, so graduated as a physical therapist. These days in the States, we have to get a doctorate. So I had to go to college for 7 years to get that. So finally got done with school. Started the physical therapy thing, was doing outpatient therapy. So that's like, Billy, if you had a, bum shoulder, weekend warrior, you're out playing softball or something, and you get injured, you're going to go after work. So I enjoyed that physical therapy because you got to work with athletes, things like that. But we had to stay open until 7 or 7:30 because you might go after work. Right. So it just wasn't a great schedule. And my wife and I were starting our family, and often, young kids are, for us anyway, sometimes they're in bed by 7:30 or 8. So getting home around 7:30 or 8 or 8:30, like, it just didn't love the schedule. So started looking at home health physical therapy, where I'm driving around to old folks' homes because they can't get into a clinic. So I need to go do the therapy at their house. So this job was really awesome in so many ways because I made my own schedule. My company would just send me my patients on my phone. I'd call them, schedule with them. So tons of flexibility in my schedule. Honestly, most weeks was probably not even working 40 hours a week, making, enough money. I mean, never going to get rich, but plenty of money for my family. Yeah. So as far as my wife was concerned and for the family, it was like an awesome job. Like, my wife was, just do this for the rest of our lives. This is awesome. Unfortunately, I feel like that's not a job that God made me for, because within like 6 months, I was just bored out of my mind. Yeah. And to stick with it for a year was difficult because it just was not challenging. It wasn't exciting. It wasn't fulfilling work for me. So kind of fortunately, the company I was working for was actually, I didn't really know it when I came on with them, but they were a startup staffing company actually. So they were looking for somebody on the clinical side because everybody in the office was not clinical at all. They were salespeople, marketing people, just growing this company. So they had me come in as a clinical director so that I could manage all the therapists that they had out in the field. And so I jumped at that opportunity. That role grew and grew more into like a director of operations type role. And soon I was doing no therapy at all. So this is now, not even, I was probably only 2.5 years into my physical therapy career, and I was not doing therapy at all. I was in the office. But the reason was because, Billy, I felt like I figured out in that job, like, what God created me more to do. And I was loving this work. So it was challenging. It was exciting. If you've ever been part of startup, it was really fulfilling work. The problem was now it was kind of on the opposite side of the spectrum where, work's great, but now not great for the family because now we had 2 young kids and I didn't have flexibility, and I was definitely working way more than 40 hours a week. And when I'd come home, I felt like I was kind of still on, and I just didn't have that margin that I wanted for my wife and my family, and even my faith as a Christ follower. So, and then, sometimes when you're climbing the corporate ladder, you get to the point where you're like, man, this dream that they're selling me, it just keeps moving farther away. And so there was a little bit of that. So I thought, all right, maybe there's something else. Maybe I can find, the best of both worlds where I can have the flexibility and a good home life, but also have work that's challenging. Because I didn't feel like going back to physical therapy was the answer. So somebody handed me a book, ended up going down the rabbit hole of real estate, read the Rich Dad, Poor Dad book that so many people read. And that got my gears turning of like, okay, maybe there's another option. Maybe because I felt like, Billy, that I had, okay, do I do a job that I don't like, but it's great for the family? Or do I do a job that I like, but it's not good for the family? It felt like those are my 2 choices. Read Rich Dad, Poor Dad, and was like, all right, there's another way. So a big decision that I made, Billy, I guess I've mentioned a couple, but I made a big decision to leave my corporate job, take about a 30% pay cut, go back to home health physical therapy, a job that I did not really enjoy. I mean, I enjoyed parts of it and it was fulfilling in some ways, but I knew it was not long-term. But I knew I was going to start a real estate side hustle. So that was a big decision for my wife and my family. I knew I was going to have a full-time job that supported us, but it wasn't a long-term thing. But I took a big pay cut, but also a big cut in the amount of hours I was working, and decided to start a real estate side hustle. So that's how I got into real estate.
Okay. Well, you know, and so there's a lot of different things that were happening, right? So between finding the right balance between lots of study, right? Because you went through 7+ years of study. So you actually want to use that knowledge and do something, but then you found yourself in this certain situation where you're working all these hours is not conducive for the family. Then you change, and then you got 2 kids, and then things are kind of getting out of control. But one of the things that's really interesting that you talked about, though, is it seemed that there were, in your mind, it was more of, it's either you do this or that. And then you came across, when you said that book, and you did mention Rich Dad, Poor Dad, but I'm just curious if was it Rich Dad, Poor Dad, that was the book that you came across? And did that eliminate for you the either or, and it was, I can figure out a way to do both?
Yeah. Well, so a buddy of mine at my job, he was helping me build this division. He's my partner today, interestingly enough. He handed me a book called The 16% Solution, and it's kind of an obscure real estate book. So that was the first book, but it just kind of got me started in this idea of like real estate investing, because I'd never really heard of that before. It was Rich Dad, Poor Dad, and then some conversations I had with people that started to make me think, man, there's another, it's not just these 2 options. I have more than just these 2 options. There's more out there. And with Rich Dad, Poor Dad, I feel like it's kind of this mindset shift of, there's a whole different way of doing life and doing work. And just, I didn't have really entrepreneurs in my life. So I think it just started getting the gears turning of like, man, maybe I could do something of my own. So it was all that got me starting to think like there might be something else out there, another option.
Okay, perfect. So you started seeing that, and that's what I was looking to clarify. So it was not Rich Dad, Poor Dad that kind of started it. It was a 16% solution, but then eventually you got to Rich Dad, Poor Dad. Now, and I even wanted to kind of go back a step before, because I don't come from a family that was involved in real estate. Both of my parents were very blue collar, worked 2 jobs, and were like, their biggest thing was go out and get a good education, so you don't have to do the stuff that I was doing, right?
Yep.
And so when I hear you talk about someone that gave you the 16% solution, it makes me think, okay, so you are where you are today, but the kind of the origin of that, were you surrounded by other real estate people? Like, what was it that gave someone the impetus to give you the 16% solution versus learning how to go out? Or did you think about maybe learning how to day trade stocks as well? Because that was maybe less time. Maybe you could take us a little bit through that.
Good question. So, the buddy of mine, it's not like he was really into real estate or knew people that were. It was more like, I think somebody recommended the book to him, or he just heard it somewhere. He's kind of one of those guys, like he'll just go off on a rabbit trail. But he is one of those guys, and I am too, Billy. And I can tell you are, like, just kind of that constant self-improvement, that challenging, listening to podcasts, reading books. So he's just one of those guys where it's like, just always like, how can I improve? And some, at that time we were trying to improve for our job, for our company, try to be a better employee. But sometimes you start to hear someone, just when you're following people that have a growth mindset, and people that constantly want to challenge themselves and question things, and like just a curiosity. Myself and my partner are both like that. So that's really what led him to give me that book. And that's really what led me to read it and look for others. Is just, I'm still doing that today, Billy. I do wonder, I do wonder about blockchain. I do wonder about crypto. I'm interested in that stuff because I can never stop, like, just being curious and finding stuff. So my partner's like that. I was like that. That's kind of what led us to that book. And then I just, real estate spoke to me, Billy. Just you mentioned your upbringing. Mine very similar. My dad's in construction. He's a construction worker, foreman for a construction company. My mom's a school teacher. So because my dad's always been in construction, I got it in my summers off from college. I was in construction. I did residential construction. So the real estate, as soon as it was like, okay, I like real estate. Like I like rehab, and I like getting my hands dirty. So it spoke to me pretty quickly. It hit a lot of levels for me. But yeah, and then I had a good buddy at church that I met with. He was already in real estate. So started kind of talking to those people and just exploring it. And at every step, Billy, it was like, yeah, this is for me, man. Yeah, this is speaking to me. And it just felt good from the beginning. Yeah.
And so I love the way that you peel that back for us, right, Lee? Because it's so there's a number of different things that were happening in your life. Number one, just you had previous exposure to real estate. You were more on the construction side of things, but when someone handed you a book as part of a personal development project or training or ongoing education, it spoke to something that was probably in the back of your mind that you'd done before. And so it didn't seem like a concept that was completely foreign. And then you get this rich dad, poor dad thing. And it's kind of like, wait, hang on a second. I could do some really different things. And so
absolutely.
As you started, can you take us through that? Because like today we've got a lot of really high paid professionals that are listening to us and retirees that have, that are, in a good position financially, but also are thinking, wow, you know what? I could be doing something else. And I'm just listening to this guy, Lee, and he actually took a 30% pay cut and he was figuring out that he wanted to do real estate on the side. Like, take us through that mindset. Like, what was it most people think, I'm not going to take a 30% pay cut. I'm not doing that.
Yeah. Good question. I mean, I'll say this, Billy, my wife and I'm blessed to be married to somebody who is pretty frugal. So we always live very much below our means. So for us, a 30% pay cut, which, I mean, this does matter, but like, it just meant saving less money for us because we just live well below our means. So taking a 30% and honestly, man, I think that's important. If you do want to get into investing, if you do, the FIRE method, things like that, like, it's good to tighten your belt and it's good to play good defense, as I call it, play good defense and don't spend so much money. So we were kind of already doing that, which really helped. So taking the 30% pay cut didn't mean we had to change our lifestyle. I don't know. I think when you're young, I think you should be frugal. I think you should be trying to invest as much as you can. So luckily we were kind of already down that path. So taking the pay cut didn't mean so much to us, especially, not in the short term. Like if you told me, hey, this is going to be your income for the rest of your life, I wouldn't have done it, but I felt like, hey, we're going to take a step back to take a big step forward. That's what it felt like to me, because I just felt like we were betting on ourselves. And I thought, if other people have done this and figured this out, by this time I'm listening to podcasts, much like yours, Billy, I'm like, if other people are doing this, I can do this. I can figure this out. So it felt like a small step back and then, potential to take some big steps forward.
Yeah. And I appreciate that. And I know a lot of the Going Long family, I'm just going to repeat one of the things that you said, because I think it's really profound. And you said that you take a small step back to make a large leap forward, but more importantly, what you said, and like, I know as you're running on the treadmill, like, get ready, everybody, listen, because I'm really said something really, really important. He said, even though he dropped his revenue from his income by 30% by changing jobs, he didn't change his lifestyle. Like, that's really important, everyone. It means they saved less. So sometimes you don't need to, most of the time, you don't need to try to keep up with the Joneses. It's about understanding what your specific situation is. And when you provide yourself the opportunity to make less money, but it's going to put you in a better position over time. He took a 30% pay cut and it didn't affect his life. So I think it's very profound what you just said, Lee. So I just wanted to make sure that the entire Going Long family were like it went in, it seeped in. So one of the other things that I think is important, because we talked about it in the beginning, and it's for those of you who are watching the video version, when you're looking at the screen over Lee's right shoulder, but looking for our perspective is left, he's got this one word with 3 little words below it. And I would love for him to tell us a little bit more about that specific big word and the 3 little words that are below it. And I'm teasing that on purpose because I want people to go check us out on the video version as well. So talk to us a little. So talk to us a little bit about what is the threefold process. Help us to understand what that is, and help to educate us a bit.
Yeah. So when we were kind of dreaming of really starting a business, so when we started the real estate side hustle, Billy, we just, we did a flip, we flipped a house, then we got into a duplex, started getting into multifamily, and now we syndicate larger, apartment buildings. When my wife and I really started getting serious, like, man, this real estate side hustle, we think it's going to be a real thing. And we think, we can build a business around this. For us, Billy, our faith is very important. We're Christ followers. And we always wanted our business and real estate and investing, and anybody that invested with us, we want it to mean more than just, dollars and cents. And we hope to make a lot of money at this. We hope to make a lot of other people a lot of money at this. That's for sure. But we hope that it means something. We hope that people have an eternal mindset. And for us, what that means is just including God and our faith and living for things that are eternal instead of just building an empire here on earth that's just going to waste away and go away someday. We want to think of things more eternal. So, we went to the Bible to find a name, and the word threefold comes from the book of Ecclesiastes, which is a book written by King Solomon, way back in, back to Egyptian times, right? And all that. And he had all the money in the world and felt like at the end of his life, he's like, it's not worth anything. Like all this money means nothing. Like it doesn't buy you any more time. And that's what so many people that get into real estate, they get into it for that reason, right, Billy? Like, it's like, I want to make more money, but I want to do it so I can buy my time. I want to be able to, leave my job early like you did, like go do something different, like have that freedom. That's what money can do for you. So that's why we picked Threefold in that book, in the book of Ecclesiastes. He says, one man can fall easily. Two men might be able to withstand someone coming at him, but a threefold cord is not easily broken. So for us, what that means is, in our business, we're going to partner with our investors because that's what apartment syndication is, as your listeners probably already know. We're going to go find a good opportunity, a good investment opportunity, but we don't have the money to do it. We can't buy a 100-unit apartment building. So we partner with our investors. They bring all the capital. We can go do it. But that third part of the strand, the third part of the cord is for us, God. Is our faith and keeping our eyes on something more eternal. And just, again, that just means for us that it means more than just dollars and cents and building an empire here on earth. We're going to try to serve our residents and do right by them. And a lot of other people do that too, that don't have the same faith as us, but that's what drives us, is our faith in God.
And so this is one of the things that is really interesting, right? Because every time when you want to be able to build your business, it's having that clarity, right? Who is the client that you want to be able to serve, be able to do that. And also too, at the same time, Lee, like once you decide that you want to build a profitable business, as you said, like, look, you want to be able to do this and be able to improve the position of yourself, you're in those that invest in you, is also to be able to have a very common mindset, a common way of being able to do things. Because at the end of the day, like everything is not just about money. Like you think it is when you don't have it. Like, and trust me, I came from a family where we didn't have it. So I thought it was the most important thing. And then when you get to a certain point, you realize, wow, you know what? If you could just buy more time, if you could buy more health, if you could buy a lot of different things, you realize that money is not the only thing. So it is to look for those other things that are also more intrinsic, more fulfilling to also be involved and be a part of something else. So I appreciate you breaking that down for us, helping us to understand a bit more about it. Wow, don't you just love this conversation? This is amazing. This is fantastic. And so just really quickly, I just wanted to remind you, for those of you that are looking to create more options for yourself, get there faster, and do that with long distance investing, make sure that you go to billykeels.com/7 mistakes to avoid so that you can avoid all those mistakes, get to your goals faster and sooner. Once again, that's billykeels.com/7 mistakes to avoid. Now back to the conversation. So you talked about being in the great state of Ohio, right? And I say that with a smile. But tell us also a little bit more about kind of where you focus today, where your business tends to focus, and why you've started as this first approach, location-wise.
Yeah, say it again, the last part.
Yeah, just in terms of the location, where you've decided to place your business and where you've decided to focus your attention as you bring in other investors and you're working with them.
Gotcha. Okay. We've just stayed local, and it started that way. Like I said, we did a flip, we did a duplex. Those were in the town we live in. And then I started looking for some multifamily and was fortunate enough. And I was really just looking locally because I felt like I wanted to be very hands-on to start out. To me, like, you can invest anywhere, but if you're going to be the operator, it's helpful to be local. So a lot of people will invest, but they'll invest with another operator that's local, or at least has, a presence there, some boots on the ground. So I want to stay local. So we found our first few small multifamily properties, like a 16-unit, 8-unit, and 10-unit. We found those locally. And I partnered with a property management company that was local, and I was very hands-on. We've branched out a little bit, and we're investing in properties that are a little bit further away, but still like 45 minutes, something we can drive to, because we like to be at our properties sometimes and just check up on them and see what's going on. And then, we're we're partnering with property management companies that are local as well. And we're looking for value add properties, Billy. So we're doing a real repositioning of these properties. So we do a lot of work to them. So when we're doing that, again, I think that's more reason to have a local presence for sure. Because you want to be there like, man, hey, somebody said this was getting done. It's not really getting done the way we want. And I mean, we go out and we had 180 windows replaced in a building, that we own. So we went out there and found like they didn't caulk all the way around the way, and you can have a property manager do that, but we like to kind of be boots on the ground. If you do want to invest out of area, for me, I would want properties that are less of a value add, less work being done, more turnkey. But since we focus on the value add, we like that we can drive to our properties every week if we want.
Yeah. And so people will be like, well, yeah, but this is the Going Long podcast and da-da-da. And so the reality is there are so many people that are in different places and this is teeing it up for you just to help us understand, because there are a lot of extremely busy professionals that are living in other states that are people like me, right? I live in Barcelona, Spain, and I look for certain types of benefits. I look for benefits that will help to produce either tax benefits. I look for cash flow. I look for appreciation over time. And there may be a number of other things. I look for a place that is a cool destination because maybe I want to take my kids to the southwest of Ohio or to the middle of one other kind of place, right? In the summertime. And so the important part here is to really understand one of the keys that Lee is talking to you about is, as you understand, number one, the benefit that you're looking for, then you go to the location, right? And then in the location, the team is absolutely critical. And this is one of the things we talk about all the time. And so when you look at your operator, right, and this is an area and a space that Lee plays in with his syndication company as well, so there's kind of a joint thing happening, it's really important to make sure that the people that are in the place that are local to and managing either the manager or the property understand the location that they're in, right? And then afterwards, it doesn't matter what the specific opportunity is. That's what's there. So I'd love for you to talk to the person who's interested in understanding more about Southwest Ohio. What are some of the different benefits that are derived from the types of type of opportunities that you are bringing forward, the value add that you talked about in the multifamily space, just so they can. Oh, hey, listen, I like the Reds in the summertime or whatever. Talk to us a little bit about some of the main metrics or some of the main reasons that people are looking in your area.
Sure. Yeah, I'll tell you, Billy. I would say just the Midwest in general. And so for people overseas, maybe it's actually not the middle of America, but just think of it like the central third up and down of America. And we're also considered the Great Lakes region. So kind of, Ohio, Michigan, Kentucky, and all that. Most people consider that to be an area and a region. And I would agree with this, that we don't see a lot of appreciation, but we don't see as big of crashes during bad times either. So people will call this a cash flow market, which means if you buy an apartment building in Cincinnati, Ohio, you're likely going to make good cash flow, but that $5 million apartment building you bought isn't going to be worth $10 million in 5 years. It'll probably be worth 6, maybe 6.5. So you get appreciation just like everywhere else, but it's not going to be like that. Whereas if you bought in Phoenix a couple years ago, 5 years ago, if you bought in Las Vegas after the crash, you've doubled, tripled, quadrupled your money, all that. But at the same time, Billy, if you go back to 2008, we didn't have a giant crash here. You go to a San Francisco, Seattle, Las Vegas, Miami, they crashed, man. They crashed hard and people lost everything. So I see more and more people getting interested in the Midwest and other areas like it, because a lot of people are wondering if we're at the top of the market again. And a lot of people are wondering, we've had a long, long bull run and prices have gone up a really long way. Stock market's gone up for a really long time with no significant crash. I mean, sure, we crashed 35% for a hot second during COVID, and we came right back and we're at all-time highs again, right? And but we've seen some rockiness this year. So real estate, same way. Since 2008, basically it's been straight up, and people are wondering, is it going to crash? Well, in my opinion, I think a lot of people agree with me. If it is going to crash or correct, you'd rather be in an area like Cincinnati, the Midwest, where we don't crash as far and where we can cash flow. Because I'll see people, Billy, going into Phoenix today, going into an Austin, a Seattle, Miami, some of the markets that people know. Hey, they're great markets. They have tons of growth. I get it. I get why people are interested in those, but they're buying at a price where they know they will not cash flow, which means their income is really not more than their expenses. They're just going to kind of break even, but they think the property is going to be worth a lot more. And it might be, but it also might not be. When we have crashes, property values can go down. And I think we've gone so long in a bull market run that people think that doesn't happen. Like they forgot that property values can go down because they've gone up for so long, but they can. So when you're cash flowing like we are, where our income is significantly above our expenses, we don't care that much if our property value goes down, right? We didn't overpay and we have margin. So if our property loses value, that's fine. We'll cash flow. We'll make our investors good money and we'll wait, because I do believe that if we have a crash, hey, 5-10 years from now, everything's going to be worth more. I think we're going to continue on the long-term trend, but in the short term, investing in a place like the Midwest and Ohio is a great place to be if you can cash flow and you don't have to worry about having a correction.
I appreciate that. And you're giving us, once again, everyone has different reasons for investing. And so some of the things that I've heard you say over and over, if you're looking for a place that can produce consistent returns, you're not going to necessarily get the big upsides and you're probably not going to get the big downsides either. But if you're looking for something that's consistent, that's reliable, that is very much, Midwest and typical Midwest type of areas.
Yep.
So one of the things that sometimes people actually have to, one other question I wanted to ask you. So sometimes people will say, well, yeah, but sometimes it can be a challenge if you're in what they would consider a tertiary market, right? It's not the Chicago, it's not this or that. Maybe you could talk to us about that, because some people, maybe it's their first time and they're hearing a little bit about a tertiary market, which is not one of the main markets, or maybe a secondary market or a tertiary by definition. Talk to us a little bit about, for that person that may be like, I've heard about that, but I don't necessarily know if it's the right thing for me, just education wise.
Yeah. One thing I'd say is it doesn't matter. I think you don't want to invest in a town that's too small. I do think there maybe is more risk there, but a city like Cincinnati, Columbus, where there's still, a million people, a couple million people in those cities in the MSA, so it's a good size. What you got to look at is the number of units coming on board and the absorption of those units. So it's no different than the even bigger cities. I mean, you could go to a much bigger, a hotter city, but if they're building like crazy there, that's eventually going to catch up, and soon maybe there's too many, and then the value of everything goes down. So I think that's what you got to look at. And then the other thing I'd say, Billy, is just that that's why I think it comes back to what you and I have kind of been talking about, is like, you need a team on the ground. Then you need people in that market that say, well, yeah, let me tell you about that. And again, I can kind of do that and tell you about some of the drivers and why I feel confident in Cincinnati. But that's what you're going to need to find, because absolutely, if you don't know that market and you're like, well, I'm confident in Seattle and Dallas long term, and they've got great. So, but maybe you can't find a good investment there, and you're like, well, let me consider Cincinnati. Yeah, you need to find a team on the ground that can say, hey, here's why we do what we do, and here's why we're really good at it. And that's why that becomes so important.
And you know what, Lee, if you could help us out, right? Because there's probably that person's thinking, wow, okay, yeah, I didn't really think about that. And Cincinnati has got this population and there's less units coming on board than are being absorbed. So that is a good thing, because the absorption is going to go up. That could help and things like that. But maybe give us just like two things that are really interesting to know about Cincinnati MSA as someone to think about, okay, well, this would be a really interesting place to invest.
Yeah, I would say right now, Billy, I mean, one hot topic that you hear all the time is affordability, right? And affordable housing. And that's what we've got in the Midwest. I mean, honestly, Columbus is getting crazy. Columbus is, really hot right now. And so maybe the affordability is not quite as good there, but for the most part in the Midwest, it's still very affordable. So when we're seeing inflation, when gas prices rise, so it really starts to affect a lot of people. And I think maybe a lot of people on your show, Billy, maybe they're a little bit above that. Maybe gas prices don't quite affect them as much because it's not quite as much of a percentage of their income. But you got to think, man, 50% of the population, it really does affect them. So people will start looking to areas that are more affordable. And we've definitely got that in the Midwest. So I think that's one thing you can see that's a driver to people moving this area. And that's what we care about, right? We care about population growth. And in the Midwest, I'll say there's not a lot of population growth, but I could see that ticking up a little bit, which is always a good thing because you're gonna have more demand for your housing. And then I would just say, we're older cities that have just had companies here for a long time. In Cincinnati, for example, we've got some headquarters of GE here. We've got P&G. We've got Johnson & Johnson. These are some national brands that people, Kroger has a big presence here in Cincinnati. And then, I mean, Columbus has seen a ton of tech growth. A lot of people probably heard about Intel building the biggest semiconductor plant in the world. They chose Columbus. So I think part of that, Billy, is they know it's affordable place for people to live. So they might think, hey, we could attract people from Seattle to come all the way out here and live in a hot city like Columbus. It's got a lot going on, but they can live here for way less than they can in Seattle. And then also, I think there's land here and it's cheaper land. So Intel probably bought land a lot cheaper outside of Columbus, Ohio than they could have outside of Seattle. Right. So I think a lot to me, man, it's affordability, and that means a lot to a lot of people. So it means something to employers. And that's what we're chasing. When we have apartment buildings, we want to chase employers. We want to chase population growth.
Fantastic. So it sounds like population growth, sounds like affordability, sounds like diversification of employers as well. So some of the reasons that people are going to be continuing to move to the area, and also looking for a location for them to lay their heads in the evening. And that's really the people that we want to be able to serve. And so someone who is looking for investment opportunities, these are things that could be speaking to you more. And I'm sure Lee could talk to you a little bit more about how he can help you understand more about that. But here's the thing, Lee, like, I can't even believe these conversations go by so fast, man. It's amazing. We got to get to the going long final three. But the thing is, I can't ask you the going long final three unless you tell me that you're ready for me to ask you the going long final three. So are you ready?
I think I'm ready.
I think you were kind of born ready, man. I think it's all good. Here we go. So, we started with you on kind of the other side of the pond there in Ohio. I'd like to bring it back to this side of the pond, which is kind of like my new adopted hometown here in Barcelona, Spain. But I want to bring it back to Europe just in general. So if you could share with us what your favorite European city that you've either visited or is still on your bucket list to visit, that would be really cool.
Yeah, I have not had the opportunity to visit yet. My wife's grandparents immigrated from Germany. So she's been to Germany a couple of times. I definitely want to go there. She's still got a ton of family there. But what is number one on my list is Bern, Switzerland, which I think is pretty close to Zurich, Switzerland. Yep. We had an exchange student from Switzerland my senior year in high school. His name was Marcel, and I have 3 sisters. So finally having a brother in the house was awesome. And I mean, he came over for my wedding. I still consider him my brother from another mother, and I cannot wait to go visit him someday. So I cannot wait to go visit Marcel in Switzerland. So
perfect. So Bern, Switzerland, that is going to be your place. We're going to include it in the show notes, which will be awesome. And now I got to get to question number 2. So here's the thing. Question number 2, and this comes from a lot of the different experiences that I've had. I'm super fortunate, right? And you too. We come across some very successful people. I consider you someone who's very successful. You've done and impacted lots of lives around the globe. And hopefully you agree with me. Like, one of the things that I've noticed that people that are really successful, right? They tend to be successful because they, unlike most people, like when they put their mind to something, they put a plan together, they actually start to execute the plan, and the plan, they get it right the first time. And then they start to be able to accelerate and even, did I do that? Did I just say that? Did I just say that? I think I did. Sorry about that.
Well,
no, it's just a joke. It's an inside joke with me and the Going Long family. Don't worry. Lee's worried about me, everybody. No. He's like, oh my gosh, hang on a second. Did you really say that? No. So here's the thing. So this is kind of an inside joke with me and the Going Long family, because the reality is nobody's perfect. Perfection doesn't really exist, especially if you're in this space and you're trying to grow or you are growing. The reality is everybody makes mistakes. And the other reality is people that are successful, they really make a lot more mistakes than most people, probably 20 times more mistakes than most people. But this is no joke, Lee. This is very serious. The thing that I've noticed from those people that are successful, and whether you want to call them mistakes or learning opportunities or whatever the case may be, they do one thing very differently. Every single time there's a relevant mistake or learning opportunity, every single time, they stop. They learn from the mistake. And then most importantly, they put in different strategies, tactics, and actions to minimize the probability of that exact same thing happening again. Mm-hmm. So I don't want you to think about the mistake that you made, or if you call it a learning opportunity, I don't want you to think about that really. More importantly, I'd like you to think about when that happened, what was the one lesson that you know that the Going Long family needs to know today to minimize the probability of that exact same thing happening to them? What's the one lesson you want to share with us today?
I would say the lesson is this is specific to investing. And if you want to do it passively, make sure your operator is doing this. And that's just bringing plenty of reserves and extra capital to the deal. I've made the mistake of not doing that and needing to bring on more. And it was very early. And so I've learned that, and that you want to be very well capitalized. So there's always unforeseen things that happen. I mean, people can think of that in anything. You know, you buy a house and you get in the house and you find things that like the inspection didn't catch, right? And like you got to fix some stuff. I mean, it's the same thing on a large scale when you buy an apartment building. So we've just learned that over time that you've got to bring lots of extra capital because there's going to be deferred maintenance, going to be all these things. So if you're looking at a deal, look at how, you know, conservative your sponsors are being with bringing enough extra capital to make sure they can cover all the unforeseen expenses.
Yes. So definitely make sure that there are capital reserves. Appreciate you sharing that. And then also, I would say when you're asking the question, just make sure you're asking the question like Lee's saying. Just make sure your operators have the adequate reserves. And then because you never want to hear a word or two words, which is capital call. You don't want to hear that. It's not it wouldn't be a fun thing. So appreciate you sharing that. And then just to kind of bring us home, which is the third of the Going Long final three, Lee, is really helping us to feed our minds with knowledge. And so what is the one book that you would recommend to the Going Long family today?
Sure, man. There's so many. I mentioned Rich Dad Poor Dad already. If you haven't got into real estate at all, I would start there. But you know, one book that really helped me, and I think it helps so many people, is called The Compound Effect by Darren Hardy. And the basic premises of the book is that a lot of really good things and a lot of really big goals, you're going to work for a really long time and feel like you're making no progress, but you're actually building up so much momentum, and you're building all this up, and it's going to compound on itself. And then it's going to feel like all of a sudden you take off, but it was really all this energy that you expended. And like, it's like you're coiling up this spring, and eventually you're going to take off. And one, you know, kind of picture in the book he paints, and I'm sure a lot of people have heard this, but like if somebody offered you $2 million or they offered you a penny and told you they'd give you double the amount every day for a month, which would you take? And it's hard to imagine that if I gave you a penny today, 2 pennies tomorrow, 4 pennies the next day, 8 pennies the next day, like, you know, we're a few days in and I'm still giving you pennies. It's hard to imagine you're ever going to outpace $2 million, but it's actually closer to like 5 million, I think. Maybe it's 2.5 and then it's 5 million on the 31st day. I forget, but whatever it is, that compound effect, because 25 days in, Billy, like you're still way, way behind, but all of a sudden you kind of take off. And that's really what apartment investing is like. And I think that's what investing is like. That it starts off very slow, but if you start early and you keep pouring into it and you make some money, and you put it back in, man, at some point it's going to take off. So the compound effect really helps you to understand that principle. I think it's a life principle.
Yeah. Fantastic. So we'll include that in the show notes as well, Lee. So we're going to include Darren Hardy's the compound effect. Mm-hmm. And I cannot even believe that we've come to the end of the conversation, man. I mean, we're starting out talking about the positivity of your son having his skateboard be more turny, which was amazing, right? And then you talked to us about the 7 years that you spent getting your doctorate, and then from there, you know, you got to a point where you were actually helping weekend warriors, and as you were helping those weekend warriors, it was really, really cool, but you started realizing like you're away from your family a bit too much, and family was really important and is really important to you, and your kids getting older. And so then you kind of pivoted and you started helping other people, and you were driving around and you had more control over your time, but it wasn't really as financially rewarding as the other. And so you were kind of like, well, look, all this is kind of not really working. It's either making too much money, not enough time, or too much time and not enough money. So, and I will say it again, after a 30% decrease in salary and changing of role, you did not have to change your lifestyle. And you were able to say, listen, I picked up this book, 16% Solution. Then I got this other book, Rich Dad, Poor Dad. It helped me to understand that it wasn't about this or that. It's how do I figure out how I can do both? Yeah. And you were able to get yourself into a position where you not only got more of the knowledge, you started taking action. You began to increase your portfolio as you did that. And I know part of we didn't even really talk about a lot today, but like mentorship and surrounding yourself with others. And then also now being able to bring like-minded people together not just for money, but also for money, eternity, and things that go beyond money, and being able to do that in a way, well, through syndications where you're able to continue to help people. Your focus as an operator and syndicator in the specific Southwest of Ohio right now, and being able to help other people to do that, educating them, helping them to understand that the benefits that they can get. And I know that I get to talk to you anyway after this and probably beyond this and stuff like that. But I know that there's so many people that are part of the Going Long family, Lee. They're thinking to themselves, I got to get in touch with Lee. I got to find out more about what he's doing. This is going to be awesome. So do me a favor, help us understand what is the best way for the Going Long family to find out more about you and also what you have going on at Threefold REI.
Yeah, I appreciate that, Billy. I'm very active on LinkedIn. So, find me, you can find Lee Yoder on LinkedIn, and then check out our website. It's Threefold, spelled out REI as in realestateinvesting.com. So it's threefoldrei.com. And we got a lot of stuff there, Billy. You can sign up to be part of our newsletter and reach out to us there. We got a free ebook called 5 Steps to Passive Income for the Full-Time Dad. So check that out. But yeah, probably LinkedIn or our website is the best spot.
All right, fantastic. Going Long family, I'm going to tell you this again already anyway, but when you reach out to Lee and you connect with him, just make sure that you let him know that you heard him here on the Going Long podcast. It's going to make your conversation go so much easier, so much faster, because he knows that you've already invested time up front and he knows the conversation that we've had. So make sure you send him a personalized LinkedIn invitation. And yes, he's very active on LinkedIn, and also go over, check out his website, threefoldrei.com. Lee, man, I just want to thank you from the bottom of my heart for investing your time with me and the entire Going Long family, man. Thank you so very much. Really appreciate it.
Thank you. Yeah. Thank you, Billy. It's been a pleasure, man.
All right. Awesome. Hey, Lee, if you give me like 15 seconds, I just want to wrap things up with the Going Long family, and it'd be awesome. I'll let you get out of here.
Sure.
Listen, everybody, Lee really shared his knowledge, helped you understand, gave you some tactical ideas, helped you to also recognize it's not just about money. It's about money and being able to do things with like-minded people, being able to help one another, continue to educate. And so take today's conversation, share it with your family and friends. Sit down, talk about the things that you've learned, juxtapose ideas, things like that. Because that's the way that you're going to learn even more and even faster. So while you're doing all that, I'll be really, really anxiously awaiting you for the very next conversation. So until then, go out and make it a great day. And thank you very much. Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.